On today's episode of the Cryptoverse, we have EOS hitting the exchanges, although you can still get it from the source. There's a security warning about the classic Ether wallet. It's been compromised according to their Slack. And an ex-Barclays chief says banking could face its own Kodak moment, and it urges banks to embrace new FinTech solutions. So all of that coming up on today's episode of the Cryptoverse. Stay tuned. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. I'm also the founder of Cryptoversity.com, the online school where you can learn about Bitcoin, cryptocurrencies and blockchains, and you can find out more at Cryptoversity.com. It's a Monday, so we're going to give a welcome to a few new patrons. We've got Kristen J, someone called Soup Alagnon. It's an anonymous person, but their email address is like Soup Alagnon. So welcome to you, and Vitali D. So thank you all very much for your support in becoming patrons and helping me to boost cryptocurrency adoption. Also, thanks to Willem D. Wust for the £10 donation via PayPal. Very much appreciated. And sorry to all the people that have donated Bitcoin, but you're all anonymous, so I don't have a clue who you are other than your the address you sent from, and I can't really shout that out. So there you go. Also, we are beginning a new round of competition for July. So if you would like to win yourself a free copy of the Secrets of the Bitcoin Triangle course, click on the link in the video description, fill out a 3-question survey, and that's it. You'll be then in with a chance to win at the end of July. I drew the winner yesterday. A fellow called John won a copy of the Secrets of the Bitcoin Triangle. So click on the link in the video description, enter the competition, and you are in with a chance. Easy as that. Righty-ho, let's move on to the news, shall we? EOS hits the exchanges. And it if you see the market roundup this morning, it immediately rocketed in price, although you can still get the tokens from the source. Another thing that I noticed is that the tokens have moved. So for example, let's get this right here. On Etherscan, I've been keeping an eye on, this is the contract address where the donations are being sent, right? And you can see there's only $14 million in there, 51,000 Ether. You're like, where's all the rest of it gone, right? Well, I looked at the internal transactions, and the first swath of it, 573,000 Ether, has been transferred to a different contract called EOS Owner. So Block 1 have obviously withdrawn some of that into a different wallet. So instead of it being the contract address, it's their own wallet. Now they can do that at the end of every period because the first 5 days were over. They issued the 200 million tokens evenly across the people who had pledged. And of course, once they've done that, they've fulfilled their obligations, and then the Ether that was donated, they can withdraw and start using to run their business and develop the platform. And I imagine this is exactly how it's going to go. Now every 23 hours, another 2 million EOS tokens are going to be issued, and I imagine the contract is going to withdraw the funds every 23 hours into the EOS owner contract or wallet or account or whatever you want to call it. So I made that observation myself this morning, and I thought you'd find that interesting. And you can see EOS trading on multiple exchanges. It's on CoinMarketCap, and you can also continue to get tokens directly from the website. But new tokens will become available every 23 hours. Another 2 million is going to hit the market every 23 hours now. So it's really going to be interesting how the price changes, knowing full well 2 million tokens come on the market every 23 hours. So the price is going to move around accordingly. But it's all transparent, so the release is predictable, so it might not be that chaotic. All right, story number 2 here is Classic Ether Wallet has been compromised according to their Slack. So these are the emails I actually got. It was from the Ethereum Classic Slack. Someone says, alert, ClassicEtherWallet.com has been hijacked. And then furthermore, someone says, the Classic Ether Wallet domain has been hijacked via social engineering. So don't use the regular domain to send transactions. So this relates to Ethereum Classic, right? It says addresses created before today are safe. And that came to me on the 30th of June. It then says if you must send Ethereum Classic, you can use myetherwallet.com, but make sure you switch to the ETC node. So I've already got my Ether wallet open here to show you exactly what that means. My Ether wallet can be used for both Ethereum Core and Ethereum Classic, but what you have to do is switch it into one mode or the other. In the top right hand corner here where it says node, right now I've got it on Etherscan, it says ETH. So if I open a wallet in this mode, I'll be dealing with Ethereum Core addresses, right? And then if I drop this down and I can change it to ETC, now if I open my wallet, I'll be dealing with Ethereum Classic addresses. Yeah. So yes, that's what they're talking about. So just to make sure that you don't use that Classic Ether wallet for the time being, or again, maybe just switch over to my Ether wallet. Make sure that you've got it in Ethereum Classic mode, and then you'll be fine. So that was a quick security warning. Now let's get on to the main story here. Ex-Barclays chief says banking could face its own Kodak moment and urges banks to embrace fintech solutions. So this story actually comes from an obscure source, CNBC. It's not obscure, but it's not exactly a crypto specialist news outlet, is it? We don't usually frequent these kinds of outlets. But of course, when he says this is Antony Jenkins, when he gives reference to a Kodak moment, that's a play on words, right? Because that used to be a Kodak catchphrase. But Kodak were also famous for ignoring the digital photography revolution that ultimately led to their bankruptcy. So that's kind of funny. That was a Kodak moment, wasn't it? Like a blunder. Anyway, the person in question is Antony Jenkins, who was the Barclays Group CEO from 2012 up until he was fired in 2015. I wonder why he was fired. Maybe he was asked to do something dishonest and he had an attack of conscience. I do not know. That's just my pure speculation there. Now, there's a few little highlights I've got for you here. There's a bit in orange here. It says, but he also warned that banks which failed to keep up with the pace of such technology, he's talking about blockchain technology, could be faced with an existential crisis. Yes, well, we know this, don't we? We already know that. He said that on the back of, efficiency gains, like blockchains can save banks tons of money. Well, yes, but then they also have to compete on a level playing field with all kinds of other fintech providers, which is probably something they do not want to do. Furthermore, he said this is at a conference. So this is where I've highlighted it in yellow. It says, Jenkins told CNBC at the Money 2020 conference in Europe in Copenhagen on Monday. Quote, as the technologies develop and season, they're going to create a totally different way of doing banking and financial services. Close quote. Yes. And he's moved on to his own fintech company called 10X, I believe. It's number 10 with an X, not TENX. So that's going to confuse us, isn't it? The fact that we've got 10X card and we've got now 10X, another fintech service from this fellow. It's 10X Future Technologies, which he started in 2016, according to this. Yes, interesting that he's gone from the banking industry into fintech of his own, right? The next thing I've highlighted here in the green, it says in 2015, the former Barclays boss warned that banks were approaching an Uber moment because of new financial technologies. So the Uberization of all things, the decentralization effectively. They're talking about Uber the app, where lots of independents can compete in a free market enabled by a particular platform. So Bitcoin is the enabling platform, and then anyone can effectively now start a fintech business using that as the mechanism. Now the green bit, to me, this bears a striking resemblance to the situation that big banks found themselves in prior to the creation of the Federal Reserve System. So like in the early 1900s, there was a rapidly increasing number of small banks cropping up in the United States that started competing with and eroding the market share of the major banks. But since the creation of the Federal Reserve System, when a small bank gets into financial difficulty, they're just allowed to fail, right? While big banks get bailed out. So you can see that trend. Over the last 100 years, that has led to smaller banks either being just completely collapsing and being less competitive to the big banks, or when the small banks are on the brink of collapse, big banks will just buy them up. So over the last 100 years, that has led to the power from the major banks increasing steadily to the point where now it's almost absolute. So that's that's why it bears a resemblance to back then. This time, though, the major banks are up against cryptocurrencies, which aren't as easily taken out, right? Now, when this guy, Antony Jenkins, talks about, the banks must join the new digital money revolution and the FinTech revolution, all this kind of thing. For the banks to join the FinTech revolution, though, they would have to join the ranks of what I would call the new banks, which are effectively exchanges, right? They provide storage services for your cryptocurrency, they provide security services, and obviously custody of your cryptocurrencies, which I know we always advocate, take control of your own funds and so on. There will be a portion of people just don't want to do that, though, and that's perfectly fine. Companies can start service-based businesses that will take that responsibility on for their customers, right? So if all the major exchanges, like Coinbase is effectively a new bank, they provide exchange services and so on. So in the new banking era, if the banks came along, they could pay depositors interest, right, in exchange for the deposits they place, and then the banks could charge interest to people that they lend that money to. Cool, that's how it used to work in the banking days. Now the major difference, though, in this new banking model is that they would have no control over the creation of money anymore, especially not if they are a Bitcoin bank, right? So that means that their power would reduce dramatically. And it's going to be no surprise to any of us if they are not willing to give up that kind of power lightly. So I think they'll just go down with the ship, personally. I think they'll cling on and resist and resist and resist and resist until they're gasping breath. And then maybe, I don't think they will allow themselves to die, but by the time they do decide to come on board, they will be a minor player, to say the least. All right, that's all I've got for you today in terms of the news. Thank you very much for joining me today. If you liked this episode of the Cryptoverse, go ahead and hit that like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed so you don't miss any content from the Cryptoverse. And also, please support the Cryptoverse and help me to boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron, sending me a tip by PayPal or a cryptocurrency using the link in the video description, buying yourself an online course from the courses section, or by becoming an affiliate. At the bottom of the website there, you can click on affiliate program, sign up as an affiliate, refer people to my website, and get 25% commission paid to you in Bitcoin or Litecoin whenever somebody buys something through your link. So that's all I've got for you today. I'll be back tomorrow with another market roundup and another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.